Imagine a world where a whopping $80 billion USD is at stake, causing widespread panic. And with good reason, the information I'm about to divulge has the potential to completely change your perspective on the entire cryptocurrency market. But what am I referring to precisely? Let's investigate this mystery. Unexpectedly, Bitcoin ETFs have experienced 4 days of outflows, with Grayscale's heavy sell-off of BTC playing a major role. This development is all the more intriguing because the newly authorized Bitcoin ETF has been exerting tremendous buying pressure every day, infusing billions of dollars into the crypto cosmos. You may remember that this increase in demand was a major reason why Bitcoin soared to record heights over $70,000. Altcoins were not immune to the bullish fervor that befell Bitcoin. For example, Shiba Inu saw a phenomenal 200% spike in value just 2 weeks ago, emphasizing how it is affected by the momentum of Bitcoin. The fact that outflows have continued for 4 days in a row is thus unexpected. Historically, a decline in the price of all cryptocurrencies was indicated by an outflow from a Bitcoin ETF. An obvious explanation for this association is that investors are unloading their assets due to the ETF's heavy selling pressure, which indicates a decline in market confidence, to a subsequent decline in pricing. Now that we've reached this crossroads, the question of what comes next is obvious. Is this just a temporary setback or the beginning of a new age for the Bitcoin market? Come with me as we navigate the ongoing crypto saga and try to decipher this intricate tale. Everything is on the line, and when things are clear, at this point obscured by doubt. No matter what, though, the world of cryptocurrencies is only going to get more fascinating. Just a few days ago, we saw Bitcoin ETF outflows hit record lows, adding fuel to the fire of this bear market. But yesterday, something unexpected happened. The crypto market displayed bullish behavior despite the Bitcoin ETF witnessing a big outflow, continuing to pump nevertheless. The fact that the pricing has stayed the same today is even more intriguing. An intriguing situation is developing in the market right now due to this departure from the norm. It appears, however, that Grayscale has no plans to slow down its Bitcoin selling at this moment. And they have a huge Bitcoin hoard. Massive, by which I mean in the billions of dollars, is the correct word. Patience appears to be the sole option available right now. The selling pressure from other Bitcoin ETFs will eventually outweigh Grayscale's buying pressure if it uses up all of its Bitcoin supply. The situation is clarified by a recent chart that was shared on Twitter, which shows that BlackRock's Bitcoin holdings are gradually getting closer to Grayscale's. As Grayscale keeps selling off its large Bitcoin holdings, the entire crypto market is under intense selling pressure. With self-assurance, BlackRock is steadily growing its portfolio. Grayscale, like a huge water tank, is constantly releasing Bitcoin into the market, which puts downward pressure on pricing. As Grayscale drains, BlackRock fills up, behaving like a smaller but continuously filling tank to offset the consequences. When Grayscale's resources are depleted, BlackRock's role will take the stage, causing changes in the dynamics of the market. Things start to get intriguing at this point. A Twitter user recently made headlines when they revealed a meme currency market chart. The weekly trading volume of meme coins nearly reached $80 billion this week, according to their tweet. It's either a new paradigm or a local peak. The whole cryptocurrency world went into a frenzy of discussion after this tweet. It is hard not to be impressed by the tweet's statement of the near $80 billion in trading volume. It raises an important query. Is the crypto market at its pinnacle of a short-lived trend, or is a new age about to begin? One possible explanation for the intense debates caused by this tweet is the massive amount of trading volume that was mentioned. Analysts and aficionados are speculating about what this massive volume means for the broader crypto scene, as it implies a major shift or development within the meme coin market. These two possibilities offer polar opposite eventualities, which is what makes this debate so interesting. We can dissect them. A temporary market peak, sometimes called a local top, suggests that prices may have hit an all-time high in the near future. It can be a sign that a consolidation or downward correction is on the horizon. When market dynamics undergo a sea change, it is known as a new paradigm, encouraging long-term expansion and breaking with established standards. The present volume of trade suggests that meme coins are becoming more popular, which could be a sign of a larger trend. The conversation becomes much more interesting when fans consider the potential consequences for the future of the cryptocurrency market and compare and contrast these two alternatives. When you consider Shiba Inu in a market worth more than $20 billion, wow, that's an insane sum. And this is something you need to grasp. A fascinating figure emerges from a more comprehensive analysis of the Bitcoin market, even if Bitcoin ETFs have witnessed outflows. 80% of Bitcoin's value has remained unchanged over the past 6 months. When this happens, it usually means that a lot of people are just sitting on their Bitcoin instead of doing anything with it. This behavior is supported by rather simple reasoning. People who believe in Bitcoin's future appreciation often call themselves hodlers because of its reputation as a store of value and long-term investment. Bitcoin hodlers are those who hold onto their cryptocurrency in the hopes that its value will rise in the long run, regardless of how much it costs now. This number becomes much more important when placed within the present discussion of the market's possible local peak. If the market had actually peaked, investors would likely be selling a larger percentage of Bitcoin to cash out their gains. Still, a sizable number of investors are likely waiting it out, as 80% of Bitcoin has not changed hands. Possibly because they are bracing themselves for more gains in the cryptocurrency industry. This argument's proponents claim that although some have voiced concerns about a possible local peak, the majority of Bitcoin investors are optimistic, with many anticipating the crypto market to keep going up. The impending Bitcoin halving event, set to happen in fewer than 30 days, adds to the fascination of the present market dynamics. In the past, this incident has caused the entire cryptocurrency market to experience substantial price fluctuations. On top of that, Lucy, who is officially part of the Shiba Inu development team, has just come clean about her view that the breed can reach new heights before the halving happens. If you're an investor in Shiba Inu and are hoping to make a killing soon, this comment is sure to send shivers down your spine. When these things come together, the continuing dispute regarding the fate of the crypto market is further complicated by Lucy's bullish view for Shiba Inu and the imminent Bitcoin halving. It shows how the Bitcoin ecosystem is always changing, with seemingly little changes having big impacts on investor mood and market dynamics. In addition, a well-known crypto analyst has made a new positive announcement on Twitter. An intriguing observation is highlighted in their tweet. There are presently 13 days until the bull market peaks, and between 266 and 315 days after breaking prior all-time highs. Based on these findings, it looks like the market may have entered a protracted bull phase, and there are still about 300 days left until it reaches its full growth potential. These insights shed light on the current market dynamics and give hope for the crypto space's sustained upward trajectory. The general consensus among investors is growing more bullish as they process this new data, which further supports the idea that the cryptocurrency market might be about to see a dramatic and protracted upswing. Given the possibility of significant growth in the next months, this research suggests that both retail and institutional investors should reevaluate their strategy. Crypto analysts and project insiders have painted a complex but ultimately bullish picture for the future of cryptocurrencies, which is further complicated by the combination of sustained Bitcoin ETF outflows, unprecedented trading volumes in the meme coin market, the significant percentage of unmoved Bitcoin, and the anticipation surrounding the upcoming halving event. With the ever-changing market, when taken as a whole, these indicators point to the possibility that the current crypto market upturn is really a lull before a new era of unprecedented development, innovation, and adoption begins. Please like, and subscribe for more updates and insights into the crypto market if you found this deep dive enjoyable. With your help, we can keep providing you with the best analysis of the cryptocurrency market, which is constantly evolving. Keep an eye out, and I'll be here to guide you through this thrilling adventure.